What's going on, guys? It's Steph Capital here. It's my first video. I just want to come out here and share this. This is what I use every single day to trade. Um, this is going to be very fractal to any of your strategies that you're already using. Maybe I don't know what strategies you're using. Maybe it might not work with yours, but if it does, just back test it and see. So I'm just going to talk about a simple pattern that happens in the market. So this is just going to help you read price action, and then you would be able to use your own ways of entering the market. So like your own entry models or techniques, if you use trend lines or whatever, any indicators. I'm not sure. Me personally, I just use price action. So like order blocks and like for value gaps, ICT style stuff. But whatever works for you guys works. This is just simply seeing this play out and then seeing when it happens and when it sets up, you can kind of anticipate what's going to happen next in the market, and you'll be able to enter with higher conviction rate, higher strike rate, and upper win rate. And honestly, your RR, all my trades on when I'm using this, my RR is always minimum like 1 to 3. Um, if I'm using a bigger position and I just want to get it and get out, I'll do a 1 to 2. But I've had like huge RR trades with this. It's just very good to understand what this model is, and just seeing it happen in price action, it'll help you understand things better and be able to execute. So let's just get right into it. So anyone who already studies ICT is familiar with the power of three. So this is pretty much like that, but not on the daily time frame. Well, it's fractal, so it works on all time frames, but I'm going to be strictly sticking to like the 1 hour and the 15, the lower time frames, and when your entry time frames. All right, guys, so there's two models for this. There's accumulation, manipulation, and distribution, and then accumulation, displacement, and distribution. I'm going to start with the ADD, so accumulation, displacement, distribution model first, example first, and then we'll go into the ON after. So these are my own personal study sheets, so there's going to be spelling mistakes in them. I just thought this is like the most like organic way to share this because it's just exactly what I'm doing. Like I'm writing these live while I was trading this, so I was able to capitalize on it, and then I just made a study sheet out of it after. So if there's spelling mistakes, just bear with me. Don't worry about that. I was typing fast. I was in my zone. You guys know exactly what that is. So I'm just gonna go over it quickly. I'm gonna explain it, and then you'll be able to understand. So this one is the ADD, accumulation, displacement, and then distribution. So here you have the accumulation, so it's a range. You guys should know what a consolidation movement is. It's just a sideways price action, accumulating orders on both sides. So you can see that happen clearly in this area right here. And then what you're looking for is when you see this, this is your first step for both the models. So you always want to see an accumulation happen. Once you see that happen, you're going to be able to understand, okay, now what happens next is going to dictate which way I'm looking for price to happen, and then you'll be able to act accordingly. Now, you guys, any seasoned trader would understand that price accumulates at certain points of time of day, before economic news events. There's certain reasons why price accumulates. So it could be through Asian session when it's low volatility, or they're just holding price in one area before a news event to push price higher or lower. So you know when this is happening, and when it does, you anticipate it. So I just drop a box around it, and then sometimes I'll put like alerts above or below just so I don't have to sit there and watch it the whole time until it breaks a consolidation. Then I know what I want to do next. So first you set up that. So this one, you see price heavily displace above the accumulation. It continued upwards and just had this big displacement, leaving this fair value gap here. Now, the difference between this being a displacement and not just like a liquidity run or a liquidity grab and it's a manipulation like the other model is, one, price is heavily biased. So you want to know your bias. So this one, I was bullish. I knew I had my bullish price, and I had a weekly target above price that you can't see on this because it's such a low time frame, that I know the market's going to rally for and try to get to really quickly. So our bias is bullish. So we know any moves upwards, it's just going towards time frame liquidity. You want to make sure you have your targets above that, you know where price is going to. On top of that, you see how this huge candle right here was a full candle that just left a big imbalance here, and it wasn't like a wick. It wasn't a quick candle up and then a quick candle down. That shows that it was a move upwards that wasn't just there to manipulate or grab price. that was a full move upwards that needs to be rebalanced to continue upwards because it was such an aggressive move upwards. So for example, like let's say like this candle right here. You see how it closed with a huge wick there? That just shows that it was just grabbing liquidity. There was no volume behind that candle to keep pushing down lower. The market didn't want to turn at that point. So you see how this closed full and it was a huge displacement way above this consolidation range. It shows that there's volatility behind that, and the fact that there's so much volatility behind that, we have to rebalance it before moving forward. So it wasn't a liquidity grab, and at that point, also with your bias, you know that it's going to just continue higher. So then you look for your retracement. So now when you see this happening, so you see step one, which is the accumulation, step two, which is the displacement, and then now you have your distribution. So after it comes back and you get that retracement, so now this is where you can go into your own entry models, and when you're looking for bullish trades, whatever that is that signals you to get in there, this is where you're going to be looking for that. So this is where I would drop into my lower time frames and look for optimal trade entries, maybe order blocks, inversion gaps, breakers, anything like that. That's what I mean is fractal. So maybe you have a trend line there, like this would work with a trend line. Like I'm pretty sure if you just do a line here, I don't trade trend lines, so I'm not sure, but if you threw a line right there, you'd see it retest into that trend line as well. So even if you trade trend lines, like this would work, and you'd be able to trade it with a higher conviction because you know that this is step two that's happening. So you're just looking for that third step, which is gonna be your entry, and you're gonna be able to take profit with it. So that pullback, you get that entry, and then that's when you know the last stage, which is distribution, or sometimes redistribution if you miss the first one, is going to take place. So we're just balancing here, and then you get your entry there on the lower time frame, and then you take your profits. I would say, like, see, because I trade with optimal trade entries and stuff like that, there's standard deviations that I could aim for with mine, but I'm trying to make it as open-ended for anyone who's trading. So you'd be able to do at least this high, or you look to the left and then you find other points of liquidity that the market is drawing to, like I referenced before. So on the weekly, I knew I was aiming a lot higher, or on the daily, I know there was liquidity up here that I held this trade for and I ended up getting it. So you would aim for your take profits there. This I'm not going to go over take profits in this video. I'm just going to go over getting you in the market, seeing this pattern set up, and being able to get you into the market with higher conviction. Next, all right guys, now we're gonna get into the AMD. So accumulation, manipulation, and then distribution. Also, think of it like that, plus one, plus one, plus one. So you have accumulation, manipulation, distribution, then redistribution, and then you can get another redistribution after that. So all the pullbacks when you're chasing that whole trend, or when you get multiple entries, like that's what I would do on the lower time frame. You get multiple pullbacks and you can enter on each one of them. So here it is, same thing as before. You're going to look for an accumulation. So this was our accumulation range. It was a sideways trading range. You can clearly see on both sides, market didn't want to break on the 4 hour and then 1 hour, of course. And then so now you're looking for that second. So now you're looking for that second thing, which is going to be manipulation. So it goes up. So you see how I was talking about before, how when the market is doing a manipulation and isn't doing a displacement above, you would see that you see these wicks, and how none of these candles really showed bullishness. It didn't show that it wanted to turn. All it was showing was telling the story that it wanted to trade into this 4 hour for value gap right here, this area of liquidity. It wanted to grab that liquidity and then move lower. So that's what I already had marked up, and that's what I was looking for. But whatever your trade setup is, you would, like, let's say you understand liquidity, you understand that it's going up into there, that's what you would look for. We can, in further videos, I can in future videos I can go into that and teach you guys what to look for. So after it gets up into there, the manipulation stage, you're looking for that distribution. So now it pulls off of it. So now you're looking for the retest, or the retracement, to get an entry on that. So your first one, so like I said before, I use like optimal trade entries and stuff. So I'll draw my fib here, and this would be an optimal trade entry, and I'd be able to get in there, which totally works fine. I love that. Other people use different things, just order blocks. So this last up close candle, once you break below that, As soon as you get up into this area, you can start looking for shorts in here. Any way you want to get into the market. We can go into entry patterns later if you guys are interested in that. So you'd have that opportunity. And then remember what I said when you have the +1. So you can continue to work off of this play if it's in the right trend and you're not getting to that higher time frame liquidity yet, and it has its pullbacks to get more traders into the market. So let's say you miss this entry right here. That's totally fine. I draw my fib here, it comes back, another optimal trade entry. Now you have here you can enter off of. So back to my trend line friends, if you guys are using trend lines, boom, this you would have got in again too, even using a trend line. Any of my ICT friends, you'd understand that this fair value gap is what we're looking for, this last fair value gap up here. So you'd be able to get in right there. This order block there, actually, this order block we didn't really get into. Maybe this wick. Yeah, you'd have to do it from the wick. I like to use the bodies, but anyways, yeah, so it'd be able to, that would be there. On the lower time frame, actually, that was probably a 15-minute order block that you could look for. Maybe a breaker's in there somewhere. But anyways, it's this fair value gap that our eyes are really set between, and then also that optimal trade entry. So in the lower time frame, we would have sourced some trades in there, and then once again, we get that pushback down to the sell side liquidity. And this was another trade I took, and I was originally aiming for this sell side liquidity here. We ended up getting it, but if you are trading this and you don't know where to take your profits, the easiest one would be obviously the original consolidation. So down here, which you would have got really fast, and this clear liquidity up here that caused this whole leg movement, which is the first sell side liquidity point, which you could just got, which as soon as it tapped that, you got a second retracement and then it continued lowered again. So you could take profit there. You could have TP1, TP2, and then TP3. I just go TP1 here. I just take off my whole position here, and then maybe below this or here, I'll just go risk free. So yeah, that's that one. I'll give you guys a quick live example of a trade I recently took. So this one I took yesterday, 2 days ago. Again, here we have this accumulation. It's better on the 15-minute. So we have the accumulation, we have the manipulation, and then the displacement. Once again, after I saw this happen, we have that manipulation towards the upside, which is a bearish 4-hour order block, which I had marked up already. And as soon as I saw it trade off of that order block, I saw this happen, break a structure. Once again, optimal trade entry, and then I started sourcing my trades in here. And then I aimed at the first sell side liquidity, which was down here is where I went risk free, and then I was aiming for this order block right here. Plus it was an optimal trade entry from that lower time frame. It was a standard deviation from, I'll show you guys right now, just so you guys know what I was talking about before when I said standard deviations, is I entered off this optimal trade entry. So my standard deviation is here, 1. So that's where I got my take profit from, and that's where I was aiming for. I could explain that in future videos if you guys are interested. This is just my first one, so I don't know what you guys want to see more of. I just wanted to share this because this has been my holy grail of understanding the markets, and when I see this happen, I'm able to enter with a higher win rate, and just you get that peace of mind because you've seen it happen so many times, and you're like, like I call it the market showing its hand. So I'm not just confused. It's when I don't see this, I just won't even look at the markets. I don't have to force myself to be confused. I don't have to force myself to place trades that I don't want to place. This is so many confluences, enough confluences for me where I'm like, okay, that happened. Now what's next? This happened. Okay, step 3. Now that these first two, which is AM or the AD happen, now step 3, now I have those markets showing me all these signs. Okay, boom, step 3, I'll go and enter. And when it doesn't work, it doesn't work. But guess what? It barely ever doesn't work. And that's just part of the game. When it doesn't work, it's supposed to not work. There's something that you did wrong or it just doesn't work. Plans, it's never 100%. But what I could say is if you backtest it and you look at it, it works a hell of a lot and it will make you a lot of money. Once again, I should also preface that I only trade 2 pairs, which is GJ and gold. So that's what I backtest this on. I know it works like everything. I know it does. Like I've seen it on the indices. I've backtested it with US 30. and things like that. I know it does work. These are just my bread and butter pairs that I like to focus on. But if you guys are in other markets, back test it first and look at it and then see how it reacts different, because every market has its own different characteristics. And these are the characteristics of GJ and gold. So if you guys trade GJ and gold, you're in the right place. But if you trade any other pair, you also are still in the right place. Just look at it and look at the differences. Some pairs like to just have the ADD set up a lot more. Some pairs like to have the AMD and do a lot of manipulating first. So same with like gold. Like I get for GJ, I get a lot of ADD setups where it doesn't really do the manipulation. It just runs straight. You get that retest and you just gold. Gold. It manipulates a lot, so I'll get the AMD setup a lot. But I still use both. But it's just understanding the characteristics of the market that's gonna get you guys started and on the right foot. Thank you guys, and I'll see you guys in the next one.